Happy Sunday, everybody. I hope you've had a fantastic week. Today, we're going to be talking about a very important subject, very near and dear to my heart. We're going to be talking about the wealth gap in the housing market. Last week, we had Jason Walter on, and the conversation ended up us talking about the wealth gap in the United States and how it's expanded exponentially. So today I have a very special guest on. He's actually a good friend of mine in Louisiana. He's a lender. His name is Brian Walker Weiss. So we're going to be discussing with him what he believes the wealth gap is and what loan programs will work best for people that are in the low income sector. And if there's any grants or loan packages that we may not know about that can help people get into a more affordable home. So without further ado, my good friend, Brian Walker Weiss, here he is. Here he
Hey,
is.
thank you so much for having me.
Of course, my friend. It's so good to have you on here. Believe it or not, Brian was in a very old video of mine where he was a character for me. He played a dog owner trying to find the perfect house for his girl, which
My
ended up being
girl.
his girl, which ended up being his dog. It featured one of my puppies, but
It was such a good time.
it was a very good time. Brian, why don't you tell the audience a little bit about yourself and what you do here in the good old Ascension Parish area?
Sure. So I'm a lender with USA Mortgage. I'm a mortgage originator here in Louisiana. Prior to that, I did work at a bank and do consumer and personal loans with HELOCs and things like that, as well as I was a real estate agent for 3 years, which is how I met the beautiful Kristina. And, we got together and made a little video and had some fun times. So I feel like I'm very well versed in the real estate market and the ebbs and flows with that, as well as in the lending world, because probably for the past 3 to 4 years, that's kind of been my wheelhouse, along with keeping up with real estate, because I have a plethora of friends in the real estate industry. So I get to see and hear and know a lot about that, which only helps further me, when it comes to the lending side of things.
I love that word plethora. That's one of my favorite words. I use it. One of the expressions I use, I'm like, I feel a plethora of emotion.
It's a good word.
It's a great word. It's a great word. So there is an article that Brian and I have wanted to discuss. So I'm going to read it, and you guys tell me what you think, because some of it to me read like a fluffernutter sandwich. The producer's going to pull it up here. All right. Freddie Mac is addressing the affordable housing challenges. To me, this article reads like you can decide for yourself. All right. Scroll down, Eddie. I said Freddie Mac is recognizing the effective housing solutions should not follow a one-size-fits-all approach. As a part of a mission, it's to provide liquidity, stability, affordability, and equity in the housing market. Freddie Mac accredits its housing solution team in 2020 to reduce the barriers to home ownership and provide solutions to some of the nation's toughest housing challenges. The team is focused on addressing and limiting the access to credit, home inequalities, creation and preservation of affordable housing supply, and advancement of home ownership education. They do utilize data-driven approach to conceptualize, design, and test solutions specifically aligned with the strategic markets in which they plan to deploy. Key learnings from implementation and the identification of success will result in the ability to scale, impact, and additional markets. All of that to me sounds like I have an idea. I'm going to make myself and my company look good for this. It's all a fluff and utter sandwich to me. They have a lot of key words in here that make people feel good, but they never show any actionable things that they're doing. They're having discussions. They're having plans. They're going to look at things at scale. No, this whole entire article says not a thing they're going to do to address the affordable housing crisis. Not a thing. It's a whole article on Freddie Mac is awesome because they're addressing the issue, but it doesn't say anything on how they're going to address it other than all right, let's scroll down where it says finding solutions to the unique challenges may require a new lens with certain and smaller scale of 1% solutions that in aggregate and can have a significant impact. It is also clear collaboration with both the traditional and non-traditional housing ecosystem partners is critical to drive the process, gain perspectives and expertise to ensure residents and trust within the community engagement. All of that sounds fantastic. Still not saying a thing. As an example of exploring new approaches, it will well document that affordable housing supply issues are exacerbated in communities of color and underinvested and underserved communities. Freddie Mac recognizes that it's important to start to looking at solutions and the very beginning of community life cycle in order to begin making a difference in the housing supplies as an end result. Still nothing. In many communities experiencing affordability scarcity, developers may be predominantly white and not fully attuned to the needs of communities of color or incentivize or focus on affordable housing. The Housing Solutions Team has created Freddie Mac developer program to provide technical training, mentorship, resources, connections as a way to nurture local female and BIPOC developers with a strong commitment to develop and revitalize local underinvested markets. All of this article, everything that Freddie Mac has put out, literally says nothing. And I'm like, oh, Freddie Mac is going to be out with a new program for affordable housing options. No, they're not. They're investigating. It's 100% fluff. And it's like, it's just another way for them to say, well, we're addressing the issue. And it burns my rear end because I'm thinking, oh, are they going to come up with new loan packages for people to get into more to houses? Are they going to come up with restructured loans for low income families? Are they going to work with developers to make homes available that are more affordable? Nothing in this article. So what is your opinion, Mr. Brian Walker Rice?
So, yeah, so when I read this article, I had to read it more than once. I probably read it like 3 times because I was like, what does that even mean? On a lot of the different things that they stated, like you just said, there's a lot of keywords that make you feel good. Mm-hmm. Well, that's great. Fantastic article on how wonderful you are. But Freddie Mac's been around since 1968 when Congress voted it in the secondary market to help control the mortgage industry. Mm-hmm. And get a footing. So we're now 2021, and now we have a team in place to start looking into these markets. But my question is, what data are you using? Like, is this some computer generated data? Did it come from the Housing Commission? Did it come from the Finance Authority? Is it coming from the MLS in these local areas? Or are you actually having conversations with the families that are unable to find affordable housing, with the agents who are unable to find affordable housing, and with the developers? Are you giving them enough incentive to rebuild these communities of their life cycle, to bring them back to life? And in doing so, are you making sure that if this developer gets these incentives, that they are following strict guidelines to not allow an investor to come in and purchase up your revitalized area for rental homes?
That's exactly right. Because that, and I've said this very often on these live streams, as us as a community can always go to zoning and planning and zoning meetings. And in those meetings, there always is HOA rules that have to be approved. And you can specify, look, we will, as a community, accept this subdivision where we're not going to allow more than, let's just say, 1% of the homes or 2% of the homes to be rental properties. It can be written in all HOAs. It can even be a county rule that new subdivisions can't have more than X amount of rental homes in it. And you can also put a footnote on there on how many homes can be owned by investment companies, because you can have an investment company that owns a house and they may be like renting it under the table where you don't even know that it's like being rented. So you can put a limit on that as well. But all of these, it is possible, like you said, for builders to get incentives to build more affordable housing. I can't really blame the builders right now for wanting to put a 3,000 square foot house on a postage stamp lot because they can make more money on that. But if you give
Right.
them the incentive for, let's just say, the building materials to build that house at a discounted rate, much more than they would themselves, and build these houses to help people get on their feet and build smaller homes, it not only helps it helps the area, because you get a lot
Right.
of people out of apartments and then they become property tax people. They're paying
Right.
property tax that helps roads, that helps schools. So it's an incentive for the whole community to have more people that actually own a home than live in rental properties. So I know that some people have some questions here that are coming up. And Eddie, if you want to put some of those on the screen, if you have any thoughts on how we can solve the affordability crisis and the wealth gap, because it's gotten huge, huge. So if you have any questions or any comments about that, please put them in there. Halu says, question, will mortgage forbearance ending affect the housing market? What is your opinion there, Mr. Brian?
So I
If I
don't
have one.
that can go one or two ways. I don't think that the mortgage forbearance is actually going to affect the housing market very much, because they're restructuring these loans so that people can remain in their homes, because the banks and the mortgage companies definitely do not want these mortgages on their books to be resold, because they lose money.
Mm-hmm.
And if they can work with the current homeowner to keep them in their home, that's the best, so that they have a balanced portfolio, and they're not having additional fees to go along with it. Now, with that being said, pending the mortgage for those are coming out of your forbearance, that they are working with you. I would like to use the word that some people may be a little gun shy due to the pandemic, and things that have gone on, that they may say, I need to go ahead and get out of my house and get my equity and have that liquid funds, because I took a hit during this period and I'm having a hard time to recoup. So you may see a little bit of that, but I really think that's going to be minor, because everybody's going back to work, in general. And we're now finding new technology, ways to work from home and still everyone get their jobs done and keep the economy going, and workers, back there pounding the pavement. So I don't see it in a negative view. If it does come to fruition a little bit, maybe there's going to be a little slight tick, but I don't see it to be anything that's going to even be recognizable. It might be tracked in a year or two, that during a census that some people chose to do this, but I don't think that's actually going to affect the market. What do you think?
My whole thing is this, that even though the forbearance plan, let's just say, ended tomorrow, it doesn't mean that everybody that's on forbearance, it ends for them tomorrow, because you
Right.
could file all the way to the end of, I think at the end of this month, right? You can file all the way to the end of this month, and then you get 6 months off of your
Right.
mortgage, or a year, depending on your mortgage servicer, and how late, how far you can stretch out your forbearance plan. Not only that, most of these people that are in forbearance that may have not been paying for a year, they still have gained an exponential amount of equity.
Mhm.
And so if they're in a situation that they could possibly be in foreclosure, they would most likely, in most situations, put their house up on the market, and they probably could walk away either scot-free or just, with a few
Right.
dollars in their pocket. It isn't going to be like we had seen in years past. I don't think there's going to be a flood of foreclosures that hit the market. Not only that, the jobs market is still incredibly good,
Mhm.
incredibly good. Employers can't get enough employees to do the job. So those indicators right now, for right this very moment, do not scream that we're going to have a wave of foreclosures that hit the market. Now, I will preface this by saying, at the beginning of the pandemonium, I literally thought, with as many people, I think it was 7.8 million people that joined the forbearance plan, I was like, this is going to be terrible. This is going to be awful. And they kept extending this forbearance plan for people to get on. More and more people got on and then got off. There's only like 1.6 million people that are currently
Mhm.
on it. So I don't think we have anything to worry about as far as home prices tanking. The problem is that it doesn't help people that are looking for a more affordable housing option,
Correct.
which I know that's what they're looking for. I do want to say thank you to Construction Cronies for the $5 Canadian super chat. Thank you so much. Hello to Eddie, Kristina, Eddie, Dan, the man, Lawnmower, the Rue crew, and hello to everyone. Thank you so much there, Chris Conkle. Lawnmower says, question, 14 houses for sale in my neighborhood. I have been on the market for 3 days or less. 4 houses have been on the market for 20 to 84 days. Why would some have been for sale for so long? Overpriced. I mean, that's my, if it was just that, they're all the same, overpriced. What's your analysis there?
I was going to say overpriced or undesirable.
Yeah, because a lot of people think that they can sell their house. And even though it's in bad shape, they're like, well, it just needs a coat of paint and some new shingles. There's nothing wrong with it. And the people are like down the road are going, I can buy this one that has the new shingles and the new paint and the new carpet for the same price, actually less than your house. So forget you. So we are seeing more supply on the market, but that doesn't mean that we're seeing a change in the market. The home prices are still increasing, even though you see more of a supply on homes. It's finally like getting back to normal. We still have a shortage of supply of houses in our area. There isn't enough homes for sale. Forget it. If you're in the 200 range, you're not going to get anything unless you're fighting over it.
Which is why it's not affordable. Like we just don't have anything.
Nope. Great question. Thank you so much, Lawnmower. Where did Eddie go? Did he? Oh, there he goes. CC Moon said, I bought flood insurance for the first time in my life. Oh, congratulations. This is a very smart purchase and so inexpensive. I live in Phoenix, Arizona because I have trust issues with Mother Nature. 2021 is cray-cray. CC Moon, I'm going to tell you something. I have a friend that lives in Utah, in St. George, Utah, literally a desert. And they have flood insurance. Good thing they do, because they literally have this much mud because they had a rainstorm that comes in. It's always dry there. They had a rainstorm come in, and the way that their house was built was kind of like in a cliff. Well, the water is running down off this cliff, going into their patio area, coming up through the sliding glass door, and caused about this much mud and water. So they had flood insurance. So that saved them. It's smart. You never know. It is so inexpensive, especially when you live in an area that doesn't flood.
Right. I was going to say, in those areas, I mean, that's just an additional protection. And if you have the means to be able to purchase that, and it's at such a low premium, get it. Whatever you can do to protect your investment. If you are able to do that, absolutely.
Cece, I want to know how much you actually spent on it for that area. Margaret C. Sullivan says, I saw a house yesterday, put in an offer today. Supposed to be a decision tomorrow. What a whirlwind. Your channel and advice has been super helpful through my home search. Thanks so much. Oh, well, thank you, Margaret. I'm glad that you have gotten some good tidbits of information here. All right. Do we have any more questions, Eddie? All right. Killian 1 says, question, how do you think Newsom's removal of the single family zoning in California will affect California home prices? Do you think other states will do something similar? I'm unfamiliar with this ruling, honestly. Eddie, let's see if Eddie has an article he can pull up. How do you think Newsom's removal of the single family zoning in California will affect California? I'm interested to what that means, actually. Single family.
Me too, because California's housing prices are actually insane.
Right.
From someone who was just looking at homes in California to purchase. So
yeah, but I'm just thinking, why would you remove the single family dwelling zoning? Because that would be horrible. That would be horrible, because you have areas that are like just regular neighborhoods, and then you have areas that are more like apartment buildings, and they're mixed use. They're zoned mixed use. If you took that away, then you could have an apartment or a big 3 townhomes right next to your house. That seems ridiculous if that's the case, if that's what it means. Let's see. Eddie's got the commercial going. Okay, Governor Newsom abolishes the most single-family zoning in California. And one of its first actions after surviving an election seeking to oust from the Governor Gavin Newsom on Thursday, and essentially abolished single-family zoning in California and greenlighted a series of bills intended to bolster the state's housing production. By signing the bill, this signing Senate Bill 9 into law, Newsom opened the door for development of up to four residential units on a single family lot in California. The move follows growing push by local governments to allow multi-family dwellings in more residential neighborhoods. Berkeley voted to eliminate single-family zoning by 2022 in San Jose, and set to consider the issue next month. So is it in certain areas of California? All right. While opponents for fear a sweeping change will destroy the character of residential neighborhoods, and supporters hail it as a necessary way to combat the state's persistent housing crisis and correct city zoning laws that have contributed to racial segregation. Addie, I can't see below the little thing here. Affordability crisis is undermining the California's dream for families across the state and threatens long-term growth and prosperity. Newsom wrote in the news release, making a meaningful impact on the crisis will take bold investments, strong collaboration across sectors, and political courage from our leaders and communities to do the right thing and build for all. I think it all sounds good on paper, but I think they're right. It's going to ruin the character. You have to have zoning for other, I live in a neighborhood. I don't want to, I have covenants in my neighborhood. There's building restrictions for my neighborhood. I don't want a townhome right next to if that lot was empty and it burnt to the ground, I don't want townhomes going to be right there. That's going to ruin the value of my property.
Mm-hmm.
I think so to the answer of your question, I think it's terrible.
Yeah, I would have to agree just because of the zoning laws. And then if you go and you have a townhome that would have to be priced, if you have a single family residence, that has to be priced likely to a single family residence come to appraisal. Mm-hmm. However, if you have a townhome next to you, it will decrease your value, even though that will be sold based on a townhome of like similar value, age, etc. But you're going to have single family use and multifamily use in one neighborhood intertwined, and you could have a 4-family housing unit and then a 1 and then maybe a 2 or a 3, and there's just no rhyme or reason for that. I mean, with you definitely going to have to go through your government agencies that do the covenants, like you said.
You can see though, like even when you have mixed use property, you can see it where it's like literally a house, then it's a business, then it's a townhome. It looks junky as all get out. It doesn't look unified by any means.
Well, usually that's like suburbia. That's not actually a neighborhood.
But
you have a section of the neighborhood that would be those types of homes. And then the rest on a different filing, you would have single family residence. But generally, if you have multi-units, they're combined in one area of the neighborhood. But like in suburbia, here where we are in South Louisiana, if you have, say, on a highway, you can have your mixed use. Like you can have Lowe's, a manufactured home, your single family custom built residence, and then a feed store. You can have. I think that's a terrible idea. Terrible. Yeah, Cece Moon, for her flood insurance a year is $352.79 for $250,000 building, $100K in property, and $1,000 deductible. That's good. Send that to us.
Yeah, we don't get that here.
We do not get that. That's amazing.
We flood though. We flood here.
We do. Yeah.
We fled here bad. All right. We got any more questions? I think I saw some pop up, Eddie. Here we go. Jay Stratton says, question with a poison sign here. Does it make sense for seniors to sell their owned home and just possibly rent and use that money towards health and experiences? Does it make more sense for seniors to sell their own home and just possibly rent and use that money towards a health and experiences? You know what? This is a good question. I want to change it up just a scotch. Is reverse mortgages for seniors a good thing? Because, you could take the equity from that using reverse mortgage to pay things like medical expenses. So what is your opinion about that? And is it a good loan product?
So I'm not going to plug reverse mortgages as some other lenders might. I will say that it depends on a person's individual financial situation. So in this question, and touching on reverse mortgages, it depends on your individual financial situation on whether you feel you need to sell your home to have that retirement income for those other benefits that you want to be able to afford. With saying that, the price of homes are so expensive that if you sell, the likelihood of the affordability of the downsizing factor right now, in my opinion, is not there in the market. So when you have seniors who've raised their families and they are now out in the world working, and they're wanting to downsize homes, what they're selling their current home for to what they're going to purchase is going to be relatively the same.
Mm-hmm.
It's going to be a wash. And reverse mortgages are really good for certain people that have that equity, that say their home is paid for free and clear, or they have such an extended amount of equity. The problem that comes into play with those is that you have to be careful, because if you are frivolously spending and or using them for medical bills or things like that, because what you get out on that reverse mortgage, you can continue to take, which then of course increases the mortgage amount, which when it goes to your heirs, they have to pay back.
Can you do either a second mortgage or a equity like mortgage, where you just kind of redo your mortgage, where you take the equity out of your own home and you just stay in your house? Couldn't you do like something like that instead?
Absolutely. Like,
That's what I would think would be. I mean, a lot more retirees are deciding to retire in place, because exactly what Brian just said was that they can't find anywhere to move to.
Right.
It isn't worth it to them, but they do need that equity. So that's what I would do. I'd look into HELOCs in your area. Not all areas will do it. Not all banks will do it right now for some reason, but I'd look to find someone that does do a HELOC if you need that extra cash out of your equity. Or I would do a refinance mortgage where you take out cash out. Thank you. Cash out mortgage and redo it. Just redo it. Do it up. Eddie is pulling up the next question. He's so good. If anybody doesn't know, Eddie's my husband. He's Eddie, the producer. He's in the background, and he's the one that goes through the thing here and gets all our questions. Thank you, Eddie. Everybody give Eddie a little thumbs up, because he's the silent hero in this live stream. Lewis says, question, will the avant-garde deal in China be possible for catalyst for a housing correction? I know, I saw this. Okay, so there is a big company out of China that is kind of like the Morgan Stanley of real estate. Like you remember Morgan Stanley, and they are underwater. They have defaulted on a bunch of different loans, and people are standing at the street like, where's my money? Where is that money? And they're renegotiating loan terms because they don't have it. It could be a catalyst, but it's going to take some time before it hits here in the United States. But yes, I was reading about this like 2 nights ago at like 1:00 in the morning. Like, ooh, this is bad. This is bad. And like, it's weird to see protesters in China. China's embattled in a developer avant-garde is a bank on the brink of default. And here's why it matters. Yep. This was the article I read. Maybe it wasn't. It was something else. But snowed under is crushing debt of $300 billion. Avant-garde is a huge. I thought it was evergreen for some reason. Is a huge. Is so huge that fallout that from any other could hurt the Chinese economy. Contagion could spread beyond the Chinese market. How big is it? It's bad debt problems. And what's next? Here's what's bad. I can't read. I need to start drinking. Chinese property giant avant-garde is on the brink of a collapse, and the analysis warned of potential fallout could be far-reaching implications and spill outside the Chinese borders. Collapse will be the biggest test to the Chinese financial system faced in years. How bad is the problem? What's in store for investors? Yes. So yes, it could be a problem. We won't know the full effects of this until the poop hits the fan, because it looks like some of their biggest backers are willing to work with them so they do not fall apart. And you know how we are here. Like if someone has the problem, or we'll be like, oh, that's okay. We'll just print some more money and give it to you. We'll save the day. That's what we
We'll
do.
bail
So
you out.
yeah, we'll bail you out. It's like, we'll just print some more and give you some money and we'll bail you out. That's what we always do. God.
They find a way to print it.
Yeah, they'll find that, and that's like everybody's talking about. I have a video coming out, and they're talking about the housing, crash and bubble and everything. And it's going to take a big economic collapse in something in order for these housing prices to tank, for this bubble to pop. But right now, with everything that's going on with housing prices and the amount of people that bought houses for nearly full cash, it's going to take a while before we see home prices go down a bit. Man, Matthew Sachs says, question, could we see a federal regulation to discourage investors? I hope so. And I know, and if you're an investor, I know that you probably take that the wrong way. But the reason I say that is that it's been very difficult for people that have low income jobs, but have excellent credit to even find a house. And it's because people with bigger pockets, bigger investment companies with bigger pockets, like to buy those houses and use them for rental properties. Now they'll claim that they're doing the area a favor by doing fixing up these houses and putting them up for rent, because they'll say it's affordable rent. They made the house look a lot better. They're doing the world a favor, but they're really not. The best favor that you can do is allow people to build financial wealth, and that's through home ownership. So what do you think there, my friend Brian?
I completely agree. Federal regulations for the investors to keep from, specifically in our area, multiple housing offers. A cash offer is of course going to trump anybody that's going to get financing when it comes in on FHA or RD or anything like that, because you have a cash investor coming in. And because homes now with the pricing, it's so competitive that when you do have investors still come in, and bid on these homes, the sellers, they just want to be out at that point.
Right. And I think that the incentive, it would be more of like, I wouldn't say federal regulation, maybe seller incentives to sell to a individual buyer, and maybe given some kind of like tax credit because they sold to an individual buyer instead of an investment firm or an LLC. Maybe that would be the way to do it without having too much intervention, because, not like the federal government to mess up anything.
Well, I mean, like as a developer, they have incentives and they have to have a certain amount of, if they're doing an affordability property or an income, a lower income property, they have to, because they are governed by accepting the funds to build this property, this community, have a certain amount of, first-time home buyers, low income. There's a ratio that they have to have in order to keep their tax benefits, because if they don't, and they don't follow those regulations, they can be turned into the IRS. They can, automatically be dinged on their taxes, and then, come out in the red for ended up not following through on getting the incentives to develop the property in the first place. So we flip that over to a seller's side, not necessarily that they would be penalized because it's an individual. Mm-hmm. However, opting to have an additional tax credit to go to a single family, buyer rather than an investor would really be of a great benefit. Take some of this government money that you have allotted and put it in a program to allow for that incentive, for the seller.
So some of the biggest investment firms right now that were investing in Austin, Texas, let's say, actually it was even before the pandemic, because I have been bringing this up since like the beginning of 2019. But some of those biggest investment firms now are now moving into the Atlanta area, and some areas around Atlanta have seen a 25% increase of investors buying. And it isn't just it's foreign investors, it's local investors. It's, big conglomerate investors. So yeah, they have seen a 25% increase, which I thought was pretty interesting. Ugh.
Yeah, I know.
All right. Rigo says, question, do you think there is still a huge demand to snap up a property that will come available after the forbearance? What do you think there, Brian?
I do not think that there's going to be a demand.
Mm.
I mean, we kind of touched a little bit on this earlier. I don't know if there's going to be that many sellers after the forbearance ends. With the restructured loans, and I don't know the verbiage that might be structured in these loan packages with the individual mortgage companies that are, working with the forbearance program. There may be terms in there that by accepting, to restructure your loan, that you remain in this home for a certain period of time.
Mm-hmm. Like a 3-year
Because
window before you sell.
Yeah, because you got to think about it. This is costing, I mean, of course, the forbearance program is going to be backed by the government, which is something they put in place. But you have these individual secondary market companies, the mortgage companies, that are not making no money. So it comes in with the government into play to help them along with that. But there has to be a period of where you recoup. Mm-hmm. So if you're using your manpower for restructuring these loans, and you're bringing on new employees and things like that, and departments to regulate, it comes into regulation and all this type of stuff. Your manpower is being used up in these resources. So most times when things like this happen, there's usually some type of clause in there that's going to say, if you take this benefit, then you have to fulfill such and such.
Yeah, there might be some kind of penalty.
Yeah.
I will say that there are, though, if there is homes that are on the more affordable side and they hit the market, there is enough people out there that have been waiting, begging to find a more affordable house. Now, the people that are living in houses that are like $400,000, $500,000, $600,000, they're going to be a little bit less likely to have those investors that want those. No, the investors want those small houses that they know they can easily rent. And right. So if there is somebody that's in that forbearance program that lives in a house that is on the more affordable side, there's no doubt their house will sell instantaneously. We live in a little small town. If you had a house that was under 200,000, there's nothing. I mean, there isn't anybody that's holding it back, Larry Cake says, I'm 71 years old, veteran living in Illinois. My wife divorcing. Oops, I'm sorry to hear that. That sucks. House worth $200K, no mortgage, no other assets to split. Only income is Social Security. What's the best way to keep my house? Buy out your wife. That's what you got to do. You got to buy her out. You got to buy out her half. I don't know how long you've been married, and I don't know what your divorce laws are, but that's what we do here. You gotta buy out the other half. It's equitable.
I mean, we're in a community property state, so we govern a little different. I'm not sure about Illinois, but yeah, I mean, he would have to. Well, you don't have a mortgage, so you would do a first mortgage, and that first mortgage would end up going to her. The check,
the payout.
The payout, would go to her, and then that would be retitled into your name only.
Exactly. Yep. And that's definitely a question for the divorce attorneys, but that's the
absolutely
yeah. But that is the black and white answer. This is the we don't know the ins and outs of your divorce, but this is what that's what I would tell.
Yeah, that's a good generic answer, but please consult your attorney with everything that goes along with the divorce proceedings.
All right. S says, question, at what point do real estate backed taxes, what point do real estate backed taxes that governments all over the country are owed eventually result in tax increases, resulting in a correction for homes? At what point do real estate backed taxes that governments all over the country are owed eventually result in increases resulting in a correction for homes? Are you talking about like tax sales? Are you talking about real estate tax sales? We have them all the time. It's just another point of foreclosure process. If the people don't pay their taxes, they go into a tax sale. I want some clarity on that question.
Yeah, because I think the tax increases and the price correction.
Now, if we had a big increase of people that had their houses didn't pay their taxes because their tax had increased exponentially, And then we had a bunch of tax saled homes. Yeah, eventually the housing in the area
Right.
probably could possibly go down in price.
But
I mean,
that's voted in. You generally, if your taxes are
yeah,
increased, real estate taxes, you vote for that in your local government.
yeah, absolutely. Yeah. So I hope I understood your question right. If not, just let us know again, because sometimes, the wheels are spinning, but the hamster's dead for me. Your property taxes are likely to still your property taxes are likely still due, but your lender may not have covered you. But your lender might have you covered. Oh, you know what? I'll now if you have an exponential increase in your taxes. Now this happened to me where my escrow didn't cover my taxes. They just sent me a bill. If you own your home in Florida today, marks the deadline to pay your property taxes after the state earlier extended the original March 31st due date within 2 weeks amid the coronavirus pandemic. Despite calls to push the property taxes further into the future, but April 15th is the final day. This is an old article. The Sunshine State is to pay levies in that most counties there hover over 1% valued real estate assets. Okay, this is an old article, Eddie. It's from 2020.
Yeah, because generally that goes with your PMI, and then they adjust. They send you your bill, and then they adjust afterwards for the following year, should your taxes continue to be, that amount.
Yeah, I've had that happen. I was so mad.
It's not
and
fun.
I was like, no. And then from there on out, because it was always off every single year. I had Wells Fargo, and they were like, your property taxes increased. But I'm like, I got my property taxes bill. That's not right. And they made me pay exponential more. And I'm like, this is not right. So from there on forward, when I bought a house, the next house, I was like, I'm going to pay my property taxes separate from my
insurance,
doing escrows and all that other stuff, because it seems like the banks somehow always mess that up.
Right.
But don't forget to pay your property taxes, and don't forget to pay your property insurance, because I've had that happen too. And I'm like, oh my gosh.
Yeah, absolutely. Don't forget those.
Scary. And then they'll go ahead and find your own homeowner's insurance that they found it is wicked expensive.
Correct.
Does all cash offer at right under price still carry the weight as than a bidding over? Does it carry the same weight? Brian's used to be a real estate agent, and that will depend on the seller itself and the real estate agent they're working with. So say you're offering over the amount. Say the house is $210,000 and you're willing to give them $220,000. Now, if the cash buyer comes in and he's going to give you $210,000, what you wanted, but he can close in a few days, and you want to get out of your house, and the loan that somebody has that you're going to offer the $10,000 over, you have an FHA loan, you're only putting down 3%. It's kind of iffy on your credit. You have a letter, you've been pre-approved, but you are a more risky buyer than that cash buyer. The cash buyer is going to be much more secure in the fact that they can close on the house and close on it on time. So most likely, and I'm not saying most likely, I say in some cases, some sellers will take that cash offer because they feel more secure with letting go the $10,000 to close quickly and know that it will close on time than they would with an FHA buyer. Does it hold the same weight? Or still at this point, people are still taking the whatever, show me the money. At this point, they're just like, show me the money. In our area anyway, they don't care. They don't care. Oh, they were talking about taxes with forbearance. Oh, okay. Now Eddie gave me they were talking about who's paying the taxes during that time. The lenders are paying that taxes on that time, right? The tax bills at this time for people on forbearance, your lender is covering that, correct?
To my knowledge, yes.
Yeah,
which will end up being adjusted. With the forbearance, all that will be factored in.
Right. With when they restructure their loan, they'll pay their back taxes into that loan. It's almost like a second mortgage almost, or it depends on how they're going to do it. But they're restructuring a 30-year loan for these people, and they're going to roll in all of the payments that they missed, including escrows. So
Correct.
that's how that works. Thank you, Eddie, for clarification. He gave me a little note on the side there. That's why it's so good to have a producer. Eddie did a producer. That's why he gave us that article. He's giving us messages. HELOC or fixed or refi? That's it. That's a question for you, Brian.
So in my experience, a HELOC is generally not fixed. It's a home equity line of credit, which is like a credit card product. You will have a period of a fixed rate, but it is also driven by an index rate that fluctuates. And you generally have a draw period that, say, 10 years that goes into a repayment of 20. And your rate during that can fluctuate. You have your set rate that it goes by an index rate that is added to it. That index rate fluctuates. So with that being said, again, it depends on your financial situation, because a HELOC can be a very wonderful product if you don't know how much you're going to use. Say you're going into something and you might have a $10,000 remodel, but in essence, just refining for $10,000 really doesn't benefit you, but you can get your HELOC, and you might have a $20,000 credit line and only use the 10, and that's all you have to repay. If you go into a refinance, you're refinancing, taking out one lump sum, and your repayment is based off of the lump sum plus your current mortgage. So HELOC, you can add to and get to your limit, or refi, you take it all out at one time and your payment is based off of that. So each product definitely has their pros, and cons. With the HELOC, of course, there is a risk because you don't know what the market's going to do.
I love me a HELOC. I'm sorry. I love me a HELOC.
No, I do too. I mean, I did it with my eyes closed. I just think that where rates are right now, I think that HELOC is a phenomenal product. And especially just having that, great for emergency expenses, great for, we were hit by, a storm and things like that. And those that had availability on their HELOCs are able to kind of use that to offset that. And they're only paying a smaller price opposed to the refinance of the house, where of course they're paying all of that, all the equity they had, they then took all the cash out of it. So now they're owing more, than original.
Yeah, and the closing costs for a HELOC are minimal. Like I think it was like
usually, yes.
They're like everybody should have a HELOC. Everybody should have a HELOC. Joe said, question, many are working at home because of COVID. This caused a mass exodus to rural locations. As we win the COVID battle, many will be forced to return to the office. Will this cause a market shakeup? This will be I think we have seen a forced explosion of how people live life and work. More things that the company said were literally impossible. They would never do it. They had no choice but to do it. There's going to be a lot of companies that are going to adjust, and there's going to be some companies that are like, absolutely not. Everybody back in the office and talking to one another. Only time will tell. Now, if every single company says everybody back to the office, everybody back in their cubbies, yeah, of course it would cause that. But there's many, many very large corporations that are saying, nope, you can work wherever you want in the United States. We don't care. As long as you have good Wi-Fi, I think we're going to see how this really shapes out in a 2 to 3 year pattern. Because right now we just don't know. Still, everybody that was supposed to go back to the office, they still haven't made it back.
It changed the American way.
Yeah, it totally did. How we do business has totally changed.
Yeah.
And he was supposed to go back in, I think it's September. Now I think it's October. Yeah, I think it's October now. So he's been working from home this whole time. Working from home.
I think is great as long as the jobs are still getting done. I mean, when you say a market, shake up, you might a little bit on the corporate side of things, on brick and mortars, kind of going a little bit to the wayside, because if they don't have to pay the overhead of utilities and have a brick and mortar building, because they can see that they past 2 years, all of their employees have been working remotely and it's working just fine. They might start cutting costs in those areas. on the corporate side of real estate, but I don't necessarily see that personally on the residential side. And like you said, years to come as they navigate and where this thing's still to go. I think, we're trying to figure that out too.
I have a question for the audience. This just hit me. Okay, everybody listen up. If your company offered you an affordable housing option to live closer to the office so they had more accessibility to you, would you take that option? Would you live in a home and pay rent to your employer just so you could live closer? And let's just say even this home was a lot less expensive than what you were paying on a mortgage, but you'd be renting from the company. Would you do that? I wouldn't, because I wouldn't want to be I don't want my employer to go, hey, but I'm interested if that was an option for people to rent from their employer a small affordable home, would you do it? Would you allow? No. One said yes, 100%. Really? So we got a yes and no.
So that also depends. I mean, we're an at-will state. So does that make, if your employer says, bye, now you have to get out of your home?
Yeah.
What regulations will they put in place to protect you? At least, I would assume it would be governed by a lease. So you'd still have to be with your lease.
Seems like an invasion of privacy, but yet it would be a great job, but not long term, right? Yeah, like I don't know. It's kind of a catch-22. I don't want my employer to take my money.
Right?
Like, I want to be able to have the choice.
But it's kind of like those with a truck allowance.
True. I've not to pay rent if they bought the houses for me. Yes, if they bought it. Yeah. So years ago, believe it or not, in the old coal mines, they used to have coal mine towns, and part of your check was to rent out the little houses that the coal mining companies had made for them. I don't like that. So you're working for like really crummy wages, let's just say.
Right.
They basically own your electricity. They own your if they decide that the employees are being a little rowdy, what if they just decided to turn off the water in the area and be like, oh, sorry,
Or what if the company goes belly up? Then what happens to you, your home, your livelihood? Yeah. That's putting a lot of trust in somebody else that you have no control over, really.
Yeah. Kristina says, I don't know. I have to think on that one. I guess if I was newly married, maybe I would do it. BLK veteran disability, looking for a boxable or tiny 3D printed house, but I know little about those houses and of the qualifying things and funds and appraisals. You got a book on this and the kind of home ownership. James, I'm going to tell you one thing. If you're using your FHA benefits, your loan package has to be at least $65,000 or above. And if you're going to be buying a boxable, you're going to have to make sure that the property is already attached to land. It can't be two separate loans. So I actually was speaking to somebody today in a room about VA loans. Smartest guy I had ever spoken to. He's a retired Marine when it comes to VA loans. Why don't you, if you're on Instagram, message me, James, on Instagram, and I'll get you this guy's name, because he was the bomb diggity. Matter of fact, I'll just pull up his name right here, because he knew things about investing with your VA loan that I had never known. He was so good. His name is Anthony Glenn. I think it's the second. Anthony Glenn. I'm going to show you his Instagram page. Anthony. I love how the English say Anthony. They say Anthony Glenn. Sorry. The third. No, the second. Sorry. Ooh. Let's see if I can find him. All right. Anyways, I would go ahead and message me and I'll get you his information. Here he is. It will say this on the old Instagram. Let's see if I can get it to. Oh, you can't see it. Poop. But that's him. And he was like, he knows all about VA loans. He actually even showed me a VA loan program for homeless veterans. There's a VA loan program for homeless veterans. I was like, No one's ever told me that. And do you know how many lenders I've spoken to throughout the
Right.
United States? I'm like, "Oh my gosh." And there's, I don't know if it's just strictly out of California, but this was like the coolest thing I have ever seen. So yeah. Here he is he only for California? From what I caught from him, he was in other states as well. But I think that might be his main hub is in California, but he was in other areas as well, from what I was gathering from that conversation. I just sat there and listened with my mouth open. He was so knowledgeable. So
Taking it
knowledgeable.
all in.
Yeah. Yeah. There's just people look at VA loans as super restrictive, but if you know somebody that knows how to work those VA loans, they're really not, and they can
Right.
really benefit you to use those VA
Phenomenal.
benefits. So I learned some stuff today from that guy. All right, 20s sevenist. How about if you own a lot of tax? How about if you owe a lot of taxes? Should one wait until that is cleared up before buying a first home? Oh, like not in property taxes. Like you can't buy a house if you owe a lot in taxes.
Yeah, if it's a federal debt, you have to take care of your federal debt or have a repayment plan and show that you've been in repayment and in good status with the federal government, because Freddie, Fannie, RD, FHA, all those are federally backed programs. And the government is first thing they're going to do is hit that button and say, "Who are you and do you owe me money before
It's
I
like,
give you more?"
pay me,
Yes,
pay me. They want that.
exactly.
Yeah, you can't do it. Jay Stratton says, with all the investment and growth in Las Vegas, do you think Vegas may survive a bit better than some areas, at least at first, during our country's future possible collapse of sorts? Vegas is one of those, it's always a gamble. Who knew? It's a gambling town. It is Vegas is one of those areas, like it really got smacked hard during the last housing crashes. Like one of the hardest hit areas was Las Vegas. But they've learned a lot of lessons, and a lot of people that are purchasing homes in Vegas right now are buying them cash. There's a lot of exodus through California. These people are equity heavy with buying homes. Some of them are buying them cash. Some of them are putting down very uh like using very little in a loan product in order to purchase the house. So I think all of us are going to see an area, like I don't think Vegas is going to tank like it did in the last housing crash. I don't think you're going to have to worry about that if you're looking to purchase a home in Las Vegas currently. And they had an overbuilding problem too during that time. Then there isn't enough houses being built in Vegas. I mean, they overbuilt to the end, like so bad, so bad. What else do you got for us, Eddie? Here we go. Kristina Smallhorn, you're saying you need a ADU factory in LA, talking about HUD LA Gov office to supply low cost housing to rebuild after Ida, 50K starting prices. I ADUs are auxiliary dwelling units. They like a second house. So here in Louisiana, it's not uncommon when people are restoring a house after a flood or whatever to have a secondary building in the front of the house, but there's limitations to how long you can have them. The cost of ADUs right now are extremely high. So people are finding more creative ways to find a secondary house to put on their property. Another problem in a lot of areas is that you can have a house, a regular house, but you can't necessarily have a second house. So you almost have to trick the area. I'm not saying to do this, but look into it, maybe see if this is a possibility, because you could call it a game room or a potting shed, but happen to use it for other things. But you can't put things in it like a toilet. Like you can have everything else in there except for a toilet, or you can have everything in there, including a toilet, except for an oven. So just look into what your regulations are if you need to get around it. I'm not saying to do anything sneaky, but we all have these things. Do you do financing on any kind of accessory dwelling units, or do you do any kind of financing for what kind of financing can somebody do if they were low income? Is there any grants out there currently?
So, okay, for low income, in Louisiana, we happen to have the Louisiana Housing Corporation, as well as the CAFA, which is the Capital Area Finance Authority. Other places around the country and other states, they have housing corporations that are governed by their local, government bodies, and they have financing authorities. So we particularly have programs that are Louisiana state programs, like CAFA, for example, the Capital Area Finance Authority. They have really good products that are grants that, if you qualify, can be tag team with your loan and help you with your closing cost assistance, prepaids, things like that. Now, those do come with, pending which one you choose, basically a stipulation. Partially, the rate's going to be slightly higher, could be 0.5% to 1% higher. And with that, you have to stay in the home either 7 years or 10 years, pending your program. And if you do sell prior to that, then you have some sort of penalty that would be repaid, for selling prior.
Do we have bond money right now? There was bond money. What is that anyway?
So I don't know if there's been bond money that's been released.
Okay.
I do think that there was some money set aside, government-wise, and they were voting on it to be released, which would be like the Louisiana Housing Corporation can do bond money to help people.
But that also pays for closing costs and that kind of thing. And
but they actually have mortgages.
Okay.
So, but the thing about it is their credit criteria is really high on the credit score and what your credit profile looks like. However, it's meant for low income.
Right. So you could have a really high credit score, but just happen to have low income, but still qualify because of that.
Correct.
See, and you should, that's the one thing, like if you're looking for an affordable housing option, don't think because you don't have a high paying job that you couldn't afford to buy a home. Look into some of these programs.
Correct.
Talk to a local lender. Not your national lenders are not going to know the programs that are available to you in your local area for your state. They're just not going to know it. I mean, yeah, I know you see the commercials and everything else. They do not understand what programs are available. Find a local lender, your local bank, go to a credit union, any of those people. Talk to them. You can have a face-to-face conversation and they can tell you exactly what is available to you. So I would strongly suggest that. Got any more questions? Joe, a quick fix to the market is to ban renting single family homes for short and long term. We should force their sale, ban Airbnbs, VRBOs, REITs, any corporate owned for single family homes for profit. This is a topic of massive, aggressive conversations in real estate groups. If you've ever been on Clubhouse, I mean, I would just start a room that says, let's ban all Airbnbs and force them to sell. And you see people like their eyeballs fall out of their head. But I think in some areas, like we banned them in New Orleans because the hotel industry had a flat out fit about them. But it isn't in some areas, like for instance, in St. George, I mean, nobody's going to buy their Airbnbs are literally tiny little cottages,
right,
that they've fixed up or like small little home. Like they're really small. Like you would live there. You wouldn't live there. It's almost like a hotel room with a roof.
Right.
So,
and it's not as common in our area. I mean, there's a few downtown, and I know there still are a few that are operable, in New Orleans. Like the bed and breakfasts were Southern, so that was more of a, that was the first takeoff of it until these other, avenues started to come about. But I just know that it's not super common in our area. And if they, like you said, they're usually like these one little cottages or something where they put artsy, quirky things in there just to make you want, it's an incentive for you to stay there, that it's kind of a cool place and it's your own place where you won't be disturbed and things like that. But it's just not popular here.
If you live in a condo area and then you're going every time you go up to your apartment or go up to your condo, and every time you walk past, there's always somebody else in this apartment or in this condo next to you. That would be really obnoxious,
Mhm.
like, if always people in and out all the time. I can see how that'd be super frustrating. And I would take that up with any kind of condo association. You can always change and amend your covenants to not allow for that to happen. So if you live in a townhome or a condo area that it seems like there's a ton of Airbnbs that are popping up and you don't want any more, I start going to those meetings and put your foot down, because they're not like, that can be really annoying, really annoying. But there's some condos that are specifically meant for investors to buy
Mhm.
just for that reason. And for that exact reason, timeshares and all that, like around Orlando,
Right.
it's been going on for eons, eons. Eddie says, "Don't forget to hit the like button. Don't forget." Has anybody got any more questions? Let's see here. Yeah, no more questions. Okay, everybody. I want to tell everybody, please say thank you to Brian Walker Weiss. He is on Facebook, and he's going to go ahead and pull up his Facebook page so you guys can go over there. And if you have any questions specifically to Brian, just go ahead and go over there and just, give him a little thank you. Say hello to Brian. Eddie, you going to pull up that page? Let's see if he's going to pull it up. He's getting there, apparently. Here it is. There he is.
There we
Brian
are.
Walker Weiss, mortgage originator. Look at, I love your picture. It's
Thanks.
so professional.
Yeah, had me a good beard going right before the storm came through, and 3
Yeah.
days without electricity, I was like, "It's gotta go." I'm sweating.
Yeah. Oh, Ian of Austin, thank you so much for Austin, Texas. I love Ian. He's actually going to be doing a video soon about his he has an accessory dwelling unit. I always mess this up. I always say AU instead of ADU. I'm such a moron. But he's going to be doing one. So you guys may want to follow Ian as well, because he's going to be doing some videos on that. That's going to be pretty exciting. I want to thank everybody for spending a Sunday with us, talking to Brian about the affordability crisis. If you have any questions about the affordability crisis and you have some solutions you'd like to share, make sure you put it in the comments below. I'll be answering as many as I can throughout the week. Everybody, you have a fantastic week, and thank you. Everybody say thank you to Brian.
Thank you so much for having me.
Don't forget to hit the like button too. Yay! And we're going to do this.
Are we
We're going to do
doing the
the
jazz
dance.
hands?
Yeah, we're going to do the jazz hands. We're going to do it.
I don't do a whole